Dutch Bros stock has seen a loss of 20% following the company's recent Q2 earnings, a drastic change from large returns investors have seen in the past. Although the company reported both earnings and revenue beats, issues lay within the company's full-year guidance for fiscal 2024. The company stated they're increasing full-year revenue guidance, however, this increase was lower than analysts' expectations. Dutch Bros expects to see new store openings on the lower end of their guidance range, from approximately 150 to 165 new stores for fiscal 2024, which comes out to around 37.5 new stores per quarter. As covered in my previous video, as Dutch Bros' recent revenue growth is based on the company's ability to open new locations and not from same-store sales growth, the company's lower than expected outlook for new store openings likely resulted in a large sell-off in the company's stock. Additionally, in my previous video, I had talked about the company's stock performance over the past year, allowing investors to gain a return of approximately 30%. It's important to mention, after the recent sell-off in the company's stock, these returns have essentially been wiped out, erased, back down to a relatively modest 8% over the past year. Although Dutch Bros' explosive location growth may not be sustainable in the long term, I don't want to be entirely pessimistic on the company. They're currently taking efforts to grow same-store sales growth with existing locations by 1, taking advantage of existing walk-up windows and their loyalty app, and 2, opening new locations that would prioritize same-store sales and AUV or average unit volume. The prioritization of walk-up windows would allow the company to better serve its loyal customers, which account for 67% of transactions, and promote habitual spending on Dutch Bros beverages by making service more convenient instead of having to wait in long drive-thru lines. The focus on new locations with same-store sales growth potential would also allow the company to solidify itself against competition. However, the company states it may take until 2025 for these locations to actually be impactful on the company's financials. In my opinion, I would still be very cautious investing into Dutch Bros. Although they're making changes to obtain revenue growth from their existing stores, a large part of their existing growth has come from opening up new stores, a strategy that the company has used but may not be sustainable in the long term.